In 2026, protecting your money is more important than ever. The world is changing fast. Inflation is still high. Interest rates are unpredictable. Markets are more volatile than before. Many people are working harder than ever, but their money is not growing. In fact, for many families, their savings are slowly losing value every single year. If you do not prepare now, you may wake up one day and realize that your money cannot support your lifestyle anymore. This video will show you how to protect your money in 2026. Not with hype, not with risky shortcuts, but with smart, simple, and proven strategies. Stay with me till the end, because the last part may change how you think about money forever. Why your money is at risk in 2026. Most people think money is only lost during a market crash, but that is not true. Money is often lost slowly, silently, and invisibly. Inflation is one of the biggest threats in 2026, even if inflation looks lower on paper. The real cost of living is still rising. Groceries cost more. Rent costs more. Healthcare costs more. Education costs more. If your money is sitting in cash and earning very little interest, you are losing purchasing power every year. Another risk is unstable markets. Stocks can move sharply up or down because of global events, wars, elections, and economic uncertainty. Another risk is debt. High-interest credit cards, personal loans, and bad borrowing habits can destroy your financial future faster than almost anything else. And finally, there is emotional risk. Fear makes people sell at the worst time. Greed makes people buy at the wrong time to protect your money in 2026. You must first understand these risks. Rule number 1, cash is not king. Anymore, many people believe that keeping money in cash is safe. But in 2026, cash alone is not protection. Yes, you still need cash for emergencies. Yes, you still need liquidity, but too much cash is dangerous. If inflation is higher than your savings account interest, your money is shrinking in real value. That means you can buy less next year than you can today. The goal is not to eliminate cash. The goal is to use cash wisely. A good rule is to keep 3 to 6 months of living expenses in cash. This gives you safety and peace of mind. Anything beyond that should be working for you, not sleeping. Diversification is your first shield. One of the biggest mistakes people make is putting all their money in one place. They invest in one stock, one business, one property, or they rely on one income source. In 2026, diversification is not optional. It is essential. Diversification means spreading your money across different assets. Some money in stocks, some money in bonds, some money in real assets like real estate or commodities, some money in safer instruments. When one area performs badly, another area can support you. You do not need to be an expert. You just need balance. Diversification reduces risk without killing growth. Stock market smart, not EMOTOHL, not the MOTOANL. The stock market can be your best friend or your worst enemy. In 2026, the stock market will reward patience, not panic. Instead of chasing hot stocks, focus on quality. Look for companies with strong balance sheets, companies with consistent earnings, companies that pay dividends. Dividend-paying stocks provide income even when prices move sideways. Another smart approach is index investing. Index funds spread your money across many companies. This reduces the risk of one company destroying your portfolio. Avoid day trading unless you are a professional. Most people lose money trying to trade short-term movements. The real money is made by staying invested, not by jumping in and out. The role of gold and hard assets. Gold has protected wealth for thousands of years. In times of uncertainty, Gold often holds its value better than paper money. In 2026, gold is not about getting rich fast. It is about protection. You do not need to put all your money in gold. Even 5 to 10% can act as insurance. Other hard assets like silver, commodities, and even farmland can also help protect against inflation. These assets usually perform well when currencies lose value. Think of them as financial seatbelts. Real estate, still powerful. But be careful. Real estate is still one of the strongest long-term wealth builders. But in 2026, you must be careful. High interest rates mean higher mortgage costs. Overpriced properties mean lower returns. The key is cash flow, not speculation. If the property can pay for itself through rent, it becomes much safer. Avoid buying property only because you expect prices to rise. Focus on locations with strong demand. Jobs and population growth. Real estate should support your income, not stress your finances. Debt, the silent money destroyer. If you want to protect your money, you must control your debt. High-interest debt is one of the biggest enemies of wealth. Credit card interest can destroy years of savings in months. In 2026, interest rates are still high in many countries. Pay off high-interest debt as fast as possible. Good debt, like a reasonable mortgage or business loan, can be useful. Bad debt, like unnecessary consumer debt, should be avoided. Freedom from debt is one of the strongest forms of financial security. Multiple income streams are a must. Relying on one income source is risky. Jobs are not guaranteed. Businesses can slow down. Industries can change in 2026. Having multiple income streams is no longer optional. This does not mean working all the time. It can mean investing income, side businesses, digital skills, royalties, online services. Even small extra income streams add stability. They reduce stress. They increase flexibility. They protect you if something goes wrong. Emergency funds and insurance. An emergency fund protects you from panic decisions. Without it, one unexpected expense can force you to sell investments at the wrong time. Insurance is another form of protection. Health insurance, life insurance, property insurance does not make you rich. It prevents you from becoming poor. In 2026, medical costs and unexpected events can destroy finances quickly. Protection always comes before growth. Control your emotions with emo and most financial mistakes are emotional, not logical. Fear makes people sell when prices fall. Greed makes people buy when prices are high. The market rewards discipline. Create a plan. Stick to it. Ignore noise. Do not make decisions based on social media headlines. Long-term thinking always beats short-term emotions. Invest in yourself. One of the safest investments is yourself. Skills cannot be taken away by inflation or market crashes. Learning new skills increases income potential. Better income means better protection. In 2026, skills in technology, communication, problem solving, and online business are extremely valuable. Your mind is your biggest asset. Think long-term, not quick profits. Quick profits often come with hidden risks. Scams increase during uncertain times. If something sounds too good to be true, it usually is. Focus on steady growth, consistency, patience. Wealth protection is boring but effective. The real secret to protecting money. The real secret to protecting money in 2026 is awareness. Awareness of risks. Awareness of emotions. Awareness of long-term goals. Money should serve your life, not control it. If you plan wisely, stay disciplined, and stay patient, your money can survive and grow even in difficult times. Start today. Small steps matter, because the future belongs to those who prepare, not those who hope.